Hi, guys. Welcome to episode number 3 of WTW, where we talk about the weekend markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. As usual, we're going to start with SPY. This is the chart of the S&P 500. And the red arrow denotes Monday, and the others are Tuesday, Wednesday, Thursday, Friday. This is the week of December 2nd. As you can see, it wasn't very volatile, just a slow drift up. We went from SPY 603 to around 608, a little bit shy of 608. So nothing very crazy in this regard, but a lot happened during the week. Okay, and usually we start off with an analysis of the macro, but we're going to get into that while we're talking about each individual day that transpired this week. So let's stick with Monday. What happened on Monday? Okay, well, the first thing that we saw was that Trump started talking very tough against the BRIC nations because he doesn't like the fact that they're trying to start a competing currency. And he really said that. He goes, if Trump said that if the BRICS nations want to start a currency against the dollar, we will consider that as a serious threat. I mean, nobody has ever said that before. Any leader of the U.S. has never said that before. He's actually putting them on point here. So usually leaders say, it's not a big deal. These guys are useless. A BRICS reserve currency is never going to happen. The U.S. dollar is the reserve currency of the world, and it will stay that way forever. But the fact that Trump attacked it shows that he sees a threat out there. Okay? Even though I don't think the BRICS could become a reserve currency, I think the US dollar is fairly solid in that regard. You don't give your enemy oxygen by legitimizing his moves, especially the BRICS nations. But this just puts it more on the radar. So this has implications for the dollar and gold going forward. So we should be aware of that. Okay. There's nothing really to do right now, but it will have an impact on our gold positions and dollar and, of course, rates and the yield going forward. The second thing that happened is that France is imploding. Okay, the government is facing a no confidence vote, and we can see that in its market. Okay, so if we looked at the European markets before, but now let's look at them again to recap. Oh, sorry, that's not the French market. This is the French market. As you can see on Monday, which is this candle right here, when this was announced, the market saw it positively. I guess ousting Macron, or getting rid of the prime minister, I should say, because Macron is probably going to stay on. But getting rid of the prime minister is good for French French stocks, because they think that they're not saying that the guy is good who's going to replace him or whatever. What they're saying is that the uncertainty will be lifted, and the market saw that as a positive. And as you can see, the French market is lagging. Okay. Overall, other European markets like the DAX, which is the German market, which is on fire. This is breaking out to new highs. Europe is doing better. And what about the UK, which is the other big market? UK still stuck. It's not really doing that much. The big story is the DAX. Okay, going through the roof. And the fact that the French market is following suit is a good thing. So this is what we want to see. Like European markets, the theme there is that inflation is down and they'll be cutting rates probably faster than or deeper than the US will. So this is very supportive of markets. Falling rates is good for markets. So this is why everything is being bid. Look, if you're a trader that keeps a regular retail trader that keeps seeing the news, and let's say you're trading the European markets, and you keep hearing news that France is terrible, terrible news. They have no country. The communists are taking over, etc., etc. You would think it would be bad for this week, but look, markets do the opposite of what you actually think. It's actually the uncertainty being lifted is actually a good thing. Okay, no matter what you think of the incoming government, it's going to be a good thing. Okay, and as you can see from the DAX, it's brushing off all concerns of France. So the European market overall is doing better, despite all the negative and bad news. Okay, so and this is good for our U.S. stocks because if the global economy is recovering and getting better, it will push money towards the States. International companies in the States can start selling more abroad. A number of companies that I'm holding are internationally, have sales internationally, and are actually going to expand more into Europe. And Europe recovering is a good thing for them. So this just supports the global bullish macro thesis that we have going forward. Okay, nothing has changed so far, and this confirms it. And the other thing we should look at on Monday is the yield curve. So this is the yield curve, which is the U.S. 10-year yield minus the U.S. 2-year yield. The zero line is denoted by here. The blue line across is the zero line. Okay, it became here. This below means the curve is inverted, and above means the curve is a normal. It's a normal curve. Okay, so here it was going from inverted to flat to upward sloping. Okay, which means that it's pretty healthy for the economy, and yet it's retracing and it's back to flat now. The yield curve is flat, so it's telling us that it's the trend that you have to see. This thing going up and retracing and going back up again is positive for markets. It's not a bad thing. This is when it's bad. As you can see in 2022, the yield curve was going down, and the markets are going down. Okay, but we should still keep this in the back of our minds that I'm going to give you a weekly chart here. Okay, every time it goes negative, afterwards there's a recession. Okay, actually when it goes negative and then it goes back positive again. So now that it went negative, one of the longest negative trend in a long time, going positive, we might have a recession coming up. So at least that's what this data point says. Okay, but you have to take everything into context. This is just one negative thing, and it's not necessarily imminent. We don't know when it's going to happen. It could take up to 6 months or longer. Okay, so we don't know, but we should keep it on our radar. It's not necessarily an immediate thing. Okay, because right now all signs are pointing to bullishness. Doesn't mean we don't get corrections, but the overall trend is going to be up. Okay, so that's basically what happened. Going back to the S&P 500. So still on a bullish trend. Nothing has been violated technically, and the fundamentals are bullish. So that's what we look at. Next, I'd like to bring up a little special situation here. Elf Beauty. I made a special report on this as an addendum to the weekly trading wrap-up that we have. And I basically concentrate on this candle here, okay, on Elf Beauty, okay, which is a cosmetics brand. I like this stock, but I didn't get into it because it was on a downtrend. I got into it after it broke out here. And I was looking for a 3-point bullish technical move that breaks the down pattern and it's ready to go up, because fundamentally this is a strong stock. But you don't want to buy a strong stock when it's going down. You have to have the technicals to support your fundamentals. So for me, this is a breakout of this consolidation. That's the first step. The second step is to form a higher low, which it has. And then the third step is to break above this high, okay, which it seems to have done this week, okay, which in fact it has. So this is very positive. This is where you still want to be long. It's bullish. You want to hold your position. I have a combination of shares and options, call options. But this was the day that was worrying me, because this is when the short report by Muddy Waters came out. The stock fell all the way down to 103 from like 120 something, and then rebounded all the way back. So that was a positive sign. So this is just a follow through of this report that the technicals, the bullish technical picture is confirmed here. So I'm staying long. Okay? And I don't day trade. I don't get out every day. I get out when there's a big move. I expect it to go up to here, the 160, 170, 180 range. I'll be getting out around there, okay, and holding some for a bigger move. This is how I played my out. This is just an addendum to the special situation that I described before, okay? So let's go back to SPY again. And see what happened for the rest of the week. We saw Monday, what happened on Tuesday. Tuesday was a big day in terms of world events because South Korea declared martial law because the prime minister didn't like what the opposition was doing, and then immediately he ceased. He says there's no more martial law. Sorry, back to normal. This is very weird. I never saw this before. I just thought I'd mention it because it's super cool and it has implications for the US dollar, which will have implications for our gold position going forward. But that was just an interesting thing to mention that happened on this Tuesday. And look, the markets barely reacted. So generally speaking, these geopolitical events that seem huge don't affect the macro. Okay, it has no bearing whatsoever on our positions. Okay. So on Tuesday, we also had the JOLTS, which is the job openings, and they went up to 7.744 million as opposed to 7.372 million. So there are more job openings. But this is another thing that is talked about a lot by the market, but we can just ignore it. This is completely useless for our macro. We have other things that are more forward-looking, and this JOLTS figure can be manipulated. So just forget it, okay? And what should be noted is that during this week, we had a lot of Fed speakers, okay? This is important because they come out, they want to talk their book, they want to talk the economy into the direction that they want it to go to, okay? It's called job boning, and whatever the case may be, you should just ignore it, okay? Because it might have a short-term impact like intraday, but generally speaking, unless something big is said, it won't affect the macro. Okay, in fact, when it comes to the Fed, we should just be looking at the Fed Watch tool. This is a very important thing to look at. Okay, and here we have what's going to happen for what market participants are expecting to happen in the next meeting, which is coming up in December the 18th in a couple of weeks. Okay, and right now we are at 450 to 475 in terms of the rate, and they expect a 25 basis point cut. 85% of the market expects that. And generally, when you have it this high, that's what's going to happen. The Fed never surprises. They always do what the market wants. Okay, they don't want to rock the boat ever. Okay, it's very, very rare that they do something that is out of the ordinary. So here, there's an 85% chance. I think anything above 2/3 is almost a certainty. Let's say 67, 70% chance. Anything above 2/3 is like a guaranteed 25 basis point cut. So as we stand now, that's what we have, a 25 basis point cut. And that's all you should care about when it comes to these Fed governors trying to jawbone and talk the market up or down or into their thesis, whatever that may be. And you could play around with this. You can see what it's going to be in March. In 3 months, market participants, 50% of them expect another cut by March. So 50% of the people expect 2 cuts. Going into at the end of the first quarter. Okay, and you want to let's say what they think by the end of the year, of next year. Okay, it's about more than 55% chance that market participants expect rates to be between 350 and 375. Okay. So that's another like 1, 2, 3, 4 cuts. Let's say 4 cuts by the end of the next year. That's what they expect now. That could change, obviously, but it's fun to see their expectations. Of course, the trading happens in the delta of those expectations. So when it comes to the Fed, that's the only thing that should be of any relevance to you. Forget about day trading their individual comments here and there. It's completely useless and it's a fool's errand, a rookie mistake. Don't even do that. Okay, just look at this for the Fed. Okay, so that's it for Tuesday. And let's go Wednesday. A big move on Wednesday. Why? Because now we actually have something relevant that was discussed here. It was the ADP employment report came out, which is a private company jobs report, as opposed to the non-farm payroll report that came out today on Friday. This is the ADP, a private report, and it differs a lot, okay? And they got, well, we can look at it here. I have it lined up. Where is it here? ADP. There we go. So, as you can see, in the ADP report, it was 146,000 jobs were created. They were expecting 150, so a little bit less. But it's interesting to see how this report here, in October they had 184,000, down to nothing in the summer. But it's interesting to see how this differs with the non-farm payrolls, which we'll get to later. But some people say that this is more accurate because it's private jobs, and non-farm payrolls includes government, and it's more wide. But you know, that's neither here nor there. We should just look at the fact that these jobs are holding up. Just another indicator that these jobs are holding up, just like the non-farm payrolls jobs are holding up as well. And remember, don't trade off of this. This is just confirmation of what we thought of 3 months ago. Okay, jobs are holding up. That's what we want to see. We don't want to see any cratering. Okay, so that's what we should get here. And the big news, though, coming up this week, I would say, is Bitcoin. Okay. Let me just draw the arrow here. Where's Monday? Monday is here. Okay, so let's just draw an arrow for Monday. That's Monday. Okay. But we're talking here on Wednesday, this candle. Up big because it was announced that a number of companies are entering the space and trying to emulate what MicroStrategy did. Okay, if you don't know, MicroStrategy is probably the leading stock in Bitcoin. It bought a lot of Bitcoin, and it's for its company. It holds that as an asset going forward, and it is the most volatile stock when it comes to Bitcoin proxies out there. So when on Wednesday, let's see what MicroStrategy did. Here, it went up. This is Wednesday. It went up. As you see it, when it broke out, MicroStrategy broke through its base. It rallied much higher than what Bitcoin did. Bitcoin when it broke out from these levels, it went up. It looks like a lot, but percentage-wise, MicroStrategy beat it, which is strange. It's the leverage play on Bitcoin, I guess. But the big news is that other companies now are trying to emulate the MicroStrategy strategy, which is to buy Bitcoin and hold it as an asset. Hut 8 decided to do that. Marathon Digital. This Marathon Digital, they decided it's not. You see, it's not moving as much. It's not at highs. It's very lagging compared to MicroStrategy. You don't really want to have this in your account, I guess. But this company, it's still going up. It still went from like 16 to 26, a huge move, but it's nowhere near the highs or a new highs on MicroStrategy is at. And this company recently announced that it was going to issue an $850 million zero coupon convertible bond to raise money and invest in Bitcoin, just like MicroStrategy did. So you have a number of companies trying to copy the MicroStrategy model, which is what happens when things get popular. I mean, it happened in the uranium space. We saw that in uranium, I don't know if you guys are familiar with it, but this is the Sprott uranium physical uranium trust. Okay, back in the day when they announced that this company would just be set up to buy uranium and store it, almost like MicroStrategy just buying Bitcoin and storing it on the assets of its balance sheet. Physical uranium spot trust. We're going to store uranium and just hold it, okay? Because we think it's rare, and it's running out, and it's very difficult to mine. It takes like 2 years for the whole cycle, the uranium cycle, to play out. Okay, so it's very difficult to put online. Same thing with Bitcoin. It is a limited asset. There'll only be, 22 million, 21 million. Some Bitcoin guy could correct me on that one. I don't know. But it's a limited asset. And a lot of companies are trying to enter the space and hoard it, like MicroStrategy is trying to do. So far, that strategy is paying off. Okay, so that is the big news on the day for Bitcoin hitting the magic 10,000. As we mentioned before, when it hit 10,000, I sold half. I'm still holding. Okay, and this is Wednesday. Okay, we'll come back to this candle here later, but I want to talk about something first that happened on Wednesday as well. That is important, and we'll get back to Bitcoin. Okay. And the other thing that happened on Wednesday on the SPY is that the ISM Services came out. So we had the ISM manufacturing come out number, but this is the ISM Services number came out for November, and it was at 52.1, but last time it was 56. So it's coming down. Remember, anything above 50 means the economy in the services sector is expanding. The fact that it dropped means it's expanding, but at a slower rate. Okay, so it's still good, but that's not what you want to see, I guess, if you're super bullish the economy. But it is what you want to see if you're okay with the economy, and they'll try to still cut rates. Because if it's super bullish, they probably won't cut rates. Okay, so this is what you want to see, holding up, but not too much, like a sweet spot. Okay, this is the services, and you can see it's always much higher than I have the manufacturing here. So the manufacturing is always below 50 and still below 50. Okay, even though the manufacturing for November came in higher, and I believe the manufacturing number came in on Monday. Sorry, I forgot to talk about it, but the manufacturing number came in on Monday, and it went from 46 to 48.4. That's a good move. Okay, it's still below 50, and we need to get out of this consolidation point and go above 50. But it's just showing that we're sort of reaching a trough, and you can see historically speaking, like if we go like on a 10-year chart, look out, that's a pretty low number. And you want to see it around, it's usually above 50. When it gets below, it's not good. Okay, and look at 2022 was contracting, and we can do the same thing for the services. We can see it on a 10-year chart. You can see that services usually stays above the 50 line. Even during 2022, that big 20% crash, it was still above 50. Services always hold up better than manufacturing. The U.S. is built on services, basically. Okay, so when we see right now that services are slowing down, it's a sweet spot. We want it to be above 50, but not cratering. So this is a relevant point, okay? This is a relevant macro data because it forecasts what's going to happen in the future, okay? The ISM manufacturing, we should be looking at that. The manufacturing and the services, okay? So this is a relevant macro point. And the fact that it's slowing down, it's of note, but it's still within our positive macro framework. Okay. So what else happened on Wednesday? Again, Powell spoke, and we talked about ignoring Powell, ignoring all these Fed governors, and just sticking with a Fed watch tool, which we saw here. Okay. Other things you should ignore that everybody's talking about is like the beige book, factory orders, crude inventory numbers. We don't care anything about that because they don't really have a forward-looking view. Okay, we want to look at macro that it will have a tendency to look forward and not backwards. The only reason we look at lagging indicators, backwards indicators like jobs, like the jobs report, and the GDP, is because we want to confirm what we thought 3 months ago about jobs and GDP. Right now, when we see services, PMI, and manufacturing sort of ticking up, staying at lows and ticking up, we are forecasting in 3 to 6 months that the economy will be meh, okay. Okay? We're not expecting something great in the next 3 months, but we're expecting that it's going to hold up. So in 3 months, we should see similar numbers in GDP, around 2 to 3%, and in jobs still holding up in 3 months. Okay, because right now we have our leading indicators are showing us that the economy is holding up Not doing great, but doing okay. And that's all we care about. So now on to SPY. On Thursday, okay, yesterday. The big thing here is we're going to go back to the Bitcoin example. Just take a long time to load up this candle right here. Okay, let's see if we could blow that up. Let's go to the 15-minute chart. This is Thursday. Maybe an hour chart. Let's see if we can see it clearer. Yes. Thursday, 9 p.m. See, this is the breakout. Okay, if you can see that from 99,000 to 103,000. This happened on Wednesday night. Okay, so you coming in, everything is doing great on Thursday, and then all of a sudden, throughout the day, it started going down. And by, let's say, where's 4 o'clock? It's around here. 4 o'clock was around here. Okay, let's break this down so you can see exactly what happened, because this long wick is relevant. Okay, so it closed around here, but then after hours, all of a sudden they sold it at 5 o'clock for some reason. I can't remember exactly why, but maybe something negative came out or something dumped a crap load of Bitcoin at that point. Okay, but that was just temporary, and this can get bought back. So that resulted in this candle right here. Let's go back to the day. This is the daily chart. This candle, okay, up during the day, the previous night. For Bitcoin, it's a 24-hour. This Bitcoin thing is a 24-hour thing, so we don't start at 9:30 and end at 4. It's 24/7. So this happened on Thursday. Okay, like midnight to like midnight, I guess. So this candle is an indecision candle. It's broke up to over 100, back down, and started in the middle. Okay, this, like, because we held our Bitcoin, we sold half. We don't care where this goes intraday. We want to see how it closes. Okay, and if it closed there at these levels, it means that things are still okay. Despite the huge volatility, you shouldn't be scared. You shouldn't react. You should just wait after and see what happens. Okay? So here, nothing changed. Even though this was a crazy volatile day, nothing changed. We're still holding half. And here, and you can see Friday comes to justify this move, to justify you holding, because nothing has been violated. And if you notice, I have these moving averages here. It's not necessary to have them, but I use them as a guide to see what could happen. Okay, the red one here is the short term, which is the five exponential moving average, and this is the 25 period simple moving average. Okay, like, as long as it's above this, I'm happy. Okay, it doesn't close below this, then I start getting worried. Okay, or I might sell more. As long as it's above this, we're holding it. Okay, that's just the only technical thing that I look at. Okay. Or when it makes a big move, a psychological move to 100, it's so much more difficult to sell than it is to buy. Okay, so you have to be aware of that fact, and you have to have your own criteria. Okay, so I have mine. I sold half. I said I was going to, when it broke out, I said to myself I was going to sell half when it hits the magical 100K, and then I'm going to hold the rest for a bigger move. We'll see what happens. So that's not the only thing that happened on Thursday. We also had the initial claims that came in. Now, initial claims come out every week, and they came in at 224K versus 213. So more people are filing for unemployment. It's not good. It's starting to rise. We should be looking at that as a warning sign. If you looked at the previous video, you can see why. They tend to go up right before economic recessions. But it's a way of looking at how the jobs report is going to come in a month's time. So the initial claims are starting to creep up. Noted, but everything else that we saw in terms of the macro this week says nothing big yet. Okay, that was Thursday. And another big thing is that that came out here on Thursday for the SPY is that Roaring Kitty came out and tweeted a picture of Time Magazine, the cover of Time Magazine, I think in 2021 or something like that. And people freaked out and they just started buying GameStop again. This is GameStop on Thursday. Let's give you a perspective of GameStop over time. So we're looking at this big candle here. So it went from 26 bucks all the way to 31. It's a huge move. Just on Roaring Kitty, RK. I'm just going to call him RK from now on. Roaring Kitty meaning something. And also AMC. Okay, this is AMC today. On Thursday, it went from 485 to 550. That's a big move. Okay. Just don't react to these things. We can't do anything. This is just fluke stuff that you should not be playing. Okay. But come Friday, for AMC, it was mentioned that they were going to issue 50 million shares at the market for financing. So that's why it tanked the next day. Okay, this is why you don't chase, because this is what's going to happen. Okay, especially when you have no fundamental reason to play this stock. You're just playing it on the charts. Like I said before, I don't make my trading decisions based off charts and rumors. Okay, that's just stupid. You're going to lose more than you're going to win. Okay, you have to do some research. You have to have a fundamental reason to go into AMC, and then you use the technicals for timing to see when to enter. Okay, and let's see GameStop here just to watch it. GameStop did rip, and today it didn't go down to AMC because they didn't announce the financing, but it held in the middle for some reason. And that reason is probably because earnings here are coming out on Tuesday the 10th. Okay, so I think people are holding it despite it going up yesterday just because of Roaring Kitty. They're holding it hoping that earnings are going to go up or rip. Okay, some good news on earnings. Just hopium at this point. Okay, again, if you don't have a fundamental reason for owning GameStop, don't chase, don't use technicals to trade. Okay, that's the lesson about this Roaring Kitty stuff. I don't understand why people put their hard-earned cash into it, but to each his own. Okay, so Friday was the big jobs report. We talked about the ADP report on Wednesday. So let's talk about on Friday the jobs report. What happened? Well, they announced 227,000 jobs. They're expecting 200K, so it's much better than before. So as you notice that the jobs report here, the numbers are much higher than this is the non-farm payrolls, okay? United States non-farm payrolls. As you can see, the numbers are much higher than the ADP employment, okay, which is the private group. These are 135, 185, okay? To show you the difference of it, okay? And if you look at the your trend, COVID ruins everything. Okay, just to tell you that jobs here are just confirming that they're holding up, and they're confirming what we thought would be a strong market 3 months ago, and now we're seeing, based on our leading indicators, our leading macro indicators 3 months ago, this jobs report's now coming out now is confirming that. We were correct 3 months ago to be long. That's all it's telling us. Okay, and as long as they hold, we're good. Okay. That's all you should be taking from that. This is not to be traded off of. I know a lot of people use this as a news to trade off intraday, but that's a sucker's game. Don't do that. This is, again, it's a lagging indicator to confirm our previous macro. That's it. No more. And the last thing that we should look at that came out, a lot of economic data came out here, a lot of macro data. Okay, so what you should ignore we mentioned, and what you should look at, like payrolls and ISM manufacturing, that you should look at. Okay, and the other thing that you should look at, because it is a leading indicator, is the U.S. University of Michigan Consumer Sentiment Index. Okay, and it came out at 74 points, and they're expecting 73. So, and you saw before was 71.8. So it's getting better. Sentiment in the consumer is getting better. Now, why is this important? Okay, this is a thing that you should look at. It's a leading indicator. If we look at a 10-year chart or even the max chart, okay, let's look at a 10-year first to outline it. As you can see, before 2022, if we go back to the SPY, okay, the big drop, let's go to a weekly chart here so that we can see it clear. Okay. This drop here came at 2022, okay, January, big drop. As it was going up, January 2022 is when we had that 20% drop in SPY. Okay, that's what was scary. Now, what did the consumer sentiment say? Okay, you see, this is January 2022 when the market started collapsing. But if you see beforehand, consumer sentiment was dropping way before from the 85 level. This is like about a normal level, like 80 to 95 is like a normal level. But as you can see, it was starting dropping. And it wasn't, the market didn't start going down until here, January 2022. So this is a leading indicator. You should be paying attention, okay? And usually it troughs around 50 is a very low level. 70 is still very bad, still very low. I'll give you an example why. If you go down, this going down to 1955, all the way back to 1955, you can see the average level is around 80 to 93, okay? When it gets down to these levels, it's during bad recessions, okay? 1980, 2000, right? Okay. It started going back 1991, which is the recession then. So here we can see it's going up. Okay? We were at very low levels during COVID, and then we went back up again. Okay, and the trend is going up. Okay, let's go to 10-year. So if you can compare it down to 2022, it started going down April 2021. Started going down, and it wasn't until January 2022 that the market went down. And look, it bottoms before that. It bottoms before, and it was leading up. It bottomed in June 2022 and started going up. Okay? So by December, so the markets, remember, they bottomed in, let's see. When was it? When was this? The bottom was June 2022. Okay? Where is June 2022? Here. Okay? June 2022 is when consumer sentiment started bottoming. Okay? And if you can see, it started going up all the way till now, actually. Ups and downs, yes, but generally going up. Okay? So it led, well, whereas the market still went down or sideways for a long period after June 2022. Look, it still went sideways for a long period. It started going up and breaking these levels around June 2023. Okay? Literally a year later. Okay? But consumer sentiment, you don't just look at one thing, but consumer sentiment was telling you that things are going to start getting better soon because this was going up as the market was still sideways and going down. Okay? So this is a leading indicator. We should be looking at it. This is the max levels. We should look at the fact that we're still pretty low and we can still go high. We can still get to these levels, the 90 level and above. Okay? Above 100, this is an extreme level. We're not even close to extreme consumer sentiment euphoria yet. Okay? Not that it has to go there. I mean, it could go up to 90 before going down. We don't know. But what I'm trying to tell you is that this level is pretty low and heading up. Okay? Consumer sentiment is starting to turn. That's a positive. And so this whole time, this is the week. Let's go back to the day. So what we learned here is that a lot of stuff happened even though the market didn't look very volatile, but a lot of stuff did happen. And we're putting together the Bitcoin move, which is very idiosyncratic. It's just for Bitcoin. Bitcoin doesn't really affect the macro, but if the market's going up, Bitcoin is going to go up too. We looked at the macro. We looked at, let's see here. Let's go back to our macro thing here. Our macro backdrop. Okay. We looked at GDP. We saw that it was holding up. Jobs are holding up. That's exactly what we found out now, which confirms what we saw. What we were suspecting would be a strong market 3 months ago, and this is confirming it. Inflation falling, the yield, we saw the yield curve here. Credit spreads are still low. VIX. Let's look at the VIX. I mean, we don't even have to look at it. We can just tell you right now that it's low. Okay? And falling at 12. But people say this is too low, it has to crash. But listen, it could stay at these levels for a long time. Okay? I mean, we might get a spike up to 15 and then drift down again. But the point I'm trying to say is that our macro picture is still not violated. Okay, the yield curve, we looked at it before. Sentiment, okay, and the Fed. We looked at exactly everything that we mentioned in our macro that is relevant. We looked at it this week. ISM manufacturing, the Fed, and exactly what to look at and what to ignore. And the point is, we should still stay bullish.